Many traders use chart patterns to determine their entries and exit position. Detecting chart patterns can be very difficult and time consuming, and because some time frames are very short, the market can be very volatile and it requires quick decision making, which can lead to errors. In this video I will show you how to set up your smart positions after you've successfully identified a pattern in the chart. I will show you how you can save a lot of time by trading these head and shoulders patterns, double tops, double bottoms, and rounded tops and bottom. Identifying chart patterns can be very subjective, and oftentimes different traders place their chart patterns slightly different from how you would place them. That's why it's important that when you trade these chart patterns, that you have your risk management in place. With a trading platform like Altrady, it's very easy to set up your positions and make sure that you can set up a take profit and stop loss at the same time. This basically allows you to automate your complete position setup. You can also use the protection functions to make sure that you don't get stopped out on silly wicks or quick irrelevant movements. These functions allow you to reduce risk and increase your profits. So let's look at our chart patterns. The first chart pattern that we can identify is the head and shoulders pattern. As you can see, I've drawn the head and shoulders pattern right here, which starts with the left shoulder, the head, and the right shoulder. And typically a short position is opened once the price goes below the neckline. So in this case, we will want to open a short position if the price goes down here. So we go over to the short part, we select the price to say we want to start one here, and we specify some size, a take profit, and the stop loss we want to add. Now we can say that the stop loss should be above the right shoulder, and the take profit can be all the way down here for this nice support line. Now let's say that I want to risk 1% of $1,000. I can go over to the risk part, type in 1,000 and set it to 1%. This will automatically adjust my size based on the stop loss percentage. Now if I were to place this on the exchange, the order would execute immediately, which is not what we want. So we need to add the start position add. In this case, the price will move down, and if this price is triggered, then the sell order will be placed and the position will start. So now let's see how this would have played out. As you can see, this is a profitable position. The next chart pattern would be the inverse head and shoulders, which would typically open up a long position. So we've identified the left shoulder, the head, the right shoulder, and the price should move above the neckline. So we would open up the long position when the price goes up here. We would set our take profit right about here, and we would set our stop loss below the right shoulder. Now if I want to risk 1% of 1,000, then I go over to the risk part. I have $1,000 as my fixed amount, and I want to risk 1% of it. Now you can see that the size is automatically adjusted based on my stop loss. Now if I were to place this on the exchange, it would execute immediately again, so I would need to set the start position at. This will delay the position creation until this price is reached, ensuring that the order will not be executed immediately if I place this order now. And as you can see, this would have been a profitable position. Another pattern is the double top pattern. This would also indicate a trend reversal. So in this case, the trend was moving up, and now there's a double top and the price is likely to move down. So we want to enter a short position once this price level is broken. We can set our take profit at the next support and resistance level, and our stop loss would typically be above the double top. Now if I want to risk 1% of my $1,000 investment, then I type in 1% in the risk management part. If I were to execute this, then the price would execute immediately, and that's not what we want. So we use the start position add function to make sure that the position doesn't start until the price is actually broken through this level. And as you can see, this was a profitable position. Next to the double top, you also have the double bottom, which would typically open up a long position. In this case, we've identified the double bottom, and we would start to open up a long position once this price has been broken. We can set our take profit right about here, and our stop loss will be below here. And if we want to risk 1% of our $1,000 investment, then we type in 1% and the size will automatically be adjusted. Then we enable the start position add to make sure that we don't start this position right now, but only if this price is reached. So I can set this up in advance, go away and see how my position played out. And as you can see, this was a profitable position. Another pattern is the rounding top, which is a trend line up followed by a rounding top, and would typically indicate a trend reversal. So we would open up a short position, we would set our take profit around here, Our stop loss will be above the rounded top. And if we want to risk 1% of our $1,000 investment, then we type in 1% in the risk management part. To make sure that the position doesn't execute immediately, we enable the start position at to make sure that we only sell once the exit prices actually reach the point of interest. And now we can see how it plays out. As you can see, this was a profitable position. Another pattern is the rounding bottom. As you can see, the price is rounding down and indicating a trend reversal up there. So if the price breaks out of this level, then it usually continues on. So we can set our entry price right here. We set our take profit to the next support and resistance levels. And we can set our stop loss below the rounding bottom part. In order to risk 1%, we type in 1% and the size will be adjusted automatically. Now we don't want the position to enter immediately, so we make sure to enable the position start at function. Now let's see how this position plays out. And as you can see, this was a profitable position. Now in this video I have shown you 6 different types of chart patterns and how you can manage your positions better by using a platform like Altrady. If you want to learn more about all the features that Altrady has to offer, then make sure that you like and subscribe to our channel to stay updated with all the latest videos that we make.